I hope you like comedy as much as I do, because today is hilarious. It is a complete refutation of everything that's been going on up until now. It's like opposite day. Every sector in the S&P is green except energy. Utilities and defense are flat. Oil's getting smashed down 11% or so. Wheat fell 6%. Exxon, Chevron, Conoco down big. The whole XLE down big. And the financials are doing great. And these stocks couldn't get arrested for the last couple of weeks. JP Morgan having a big day. I'm long. Bank of America, Wells Fargo, even the credit card names. Big tech is up too. Semis are up. Biotechs are up. So this is like the opposite of what we've been seeing. So you really have to ask yourself, has anything materially changed? Or is this just one of those counter trend rallies that gives you the opportunity to unload some of the stuff that's been hurting you the most? So if you're in any of these areas of the market and you've just watched them go down 9-10 days straight, and today they look like they're going to go out at the highs, do yourself a favor. Ask yourself, is this the portfolio I still want to be in when I wake up tomorrow if this dream wears off and we go back to the reality of Tuesday? And if the answer is no, you have an opportunity to do something about it. That has been the winning strategy this year, using days like today as a chance to fix what's been ailing your portfolio. So I hope our viewers will avail themselves of that.
I certainly agree with you, Josh. One of the tricky parts of that, though, is if you look at your portfolio after an up 3% day, and a lot of these stocks that were hit hard bounced already, you might say, I want to own them tomorrow if they're not going to give it up again. I mean, tactically speaking, it's just tough to know if this is the best you're going to get in a bounce, right? So I think it's a matter of the market dictates your verdict on what you prefer to own right here, I guess. And it's tricky, right? Because as you suggest, every counter trend bounce is going to be led by the stuff that was hit the hardest. On the other hand, it's not always a one-day wonder. So, I mean, are you looking for certain clues in the action today that might tell us one way or the other?
Well, I think it's very constructive that even though the railroads are flat overall, transports look good. If you remember, there's been a lot of concern about whether or not we're even still in a growing economy anymore. So looking at, like, for example, UPS and FedEx doing well, I guess you could point to that and say, okay, I like that with the banks up. I kind of like seeing the travel names continue to rally. That gives me some sense that not all hope is lost for this to continue to be an expansionary year, and maybe we won't have an oil-driven recession. So I do like that. I do think it's constructive. I just don't think that we're done here. We're just now starting to see the biggest, strongest stocks that have held us up for the last year start to succumb to the selling pressure. Like, that really just started over the last week or so. And I don't think it ends as quickly as we all wish it would.